Well, thanks so much for tuning into this conversation. We've all been grappling with or scratching our heads, or not necessarily scratching our heads, but trying to work on our Excels about what could the possible implications of what's happening in the commodities market, and particularly the oil market, be on, well, finances at large for the nation, also for upstream companies, and how could the math change permanently or temporarily. So we thought it's best to try and get somebody who's been at the helm of affairs at India's largest upstream company, arguably, which is ONGC. Mr. Subhash Kumar, he's former CMD and Director of Finance at ONGC, joins us right now to talk as much about India upstream as also about how does he see the changed oil landscape. Mr. Kumar, great having you. Thanks so much for joining in. I hope all is safe.
Thanks, Neeraj. Very happy to be here discussing this very important issue. Now, first let's take India perspective. So India actually is predominantly dependent on the imports as far as meeting its energy needs is concerned. 85% of roughly what it consumes in terms of oil is imported. And we import close to around 200 million tons plus minus on a given year. So a country who is so much overwhelmingly dependent on imports, its finances will get impacted. There will be two ways the Indian equation will get impacted. One is, of course, from the supply side itself. There could be disruptions because most of the times the off-takers in India, actually a substantial part of the quantity they book on a long-term basis. However, they also have a portion of their total demand which they intend to play in market. So it could be 10 to 15%. To that extent, actually, you get impacted by what is happening in market. That's on physical side. However, as far as prices are concerned, they are invariably linked to the international benchmarks, and consequently, whatever is the price movement, even for the quantities which stand committed, actually, even for those, the international prices matter a lot. So to the extent there is such a huge increase in price of oil in the global markets, actually it will impact India. So if you're talking of, let's say, 200 million on a net basis, so that that becomes close to 1.5 to anywhere 2 billion for $1 increase in the price of crude, and that for a country like India is huge. In physical terms, not a substantial portion of what is produced in Russia actually gets imported to India. However, since this is quite a integrated kind of market, at the end of the day, what is happening elsewhere will also impact us.
Yeah.
From global perspective, however, if you really look at actually, again, it's a substantial quantity. Russia produces close to around 10.5 million barrels a day, and out of which around close to 5 million barrels of oil per day, and a substantial quantity of products is also exported. So to the extent, this does not reach the international markets, or there's a difficulty, there's a perception that there could be a risk, then that actually affects the dynamics globally. Yeah. And in a way, it also gets back to India.
It so does. Mr. Kumar, just one quick follow-up question. Your sense, because you've looked at this market so closely all through the years, does this, this is volatility, and at some point of time, these prices will come off as well when supply probably normalizes. But we're also hearing about not EU, but the US at least, US and UK, which are not that impacted by Russia imports, planning to or having banned Russian oil imports. Not that they get impacted too much. I'm just trying to understand, would you reckon that there's a new normal in the near term for crude prices, or is it difficult to predict?
So I think in terms of timelines in which we can analyze the impact of it, one is, of course, immediate. Second is medium term and the long term. So in the immediate, we have seen everything is getting disrupted. And while, it's a major thing that US has taken a strategic decision, and Britain has also kind of expressed its solidarity to somehow indicate that they will be withdrawing from Russian oil. The fact remains that on a given day, the world does consume 98 million barrels of oil on a given day. So consequently, if they require oil and they source it from some other countries, then some of the other consumers will have to necessarily go back and secure this oil. So so at the end of the day, if it gets produced, if supply chain is not disrupted, then this crude necessarily will find the market. It's a question of destination. Destinations will change. In the medium term, again, as you very rightly said, I don't believe that this particular conflict is going to last for a significantly long time. So at the end of the day, after every crisis, actually some sort of normalcy prevails. And we believe that it should happen soon. We wish and hope. And hopefully, there are early signs that at the end of the day, there could be some patch. However, from long-term perspective, it is really going to hurt the oil industry in a big way, because probably there was some sort of assurance which was emerging as far as consuming nations were there, that the supply chain will be assured under all circumstances. Now, this one particular incident actually reminds people that oil could still be used as a political weapon. And there could be certain situations in which you will not be assured of sustained supply because of considerations which may not be necessarily linked to the operational issues or economic issues. So that actually will, kind of push to a situation where probably at least certain parts of the regions and certain countries will move towards renewables.
Sure. Okay. Mr. Kumar, so what implications for a country like India? We've spoken about oil. There is also this implication of higher gas prices, and India is now in the mode wherein every 6 months these administered gas prices get revised. We saw a sharp revision in October. There is a belief that April will see another sharp revision, followed by maybe another sharp revision in October as well if gas prices stay higher. What is your thesis on what could happen to gas prices in India and thereby costs for consumers as well?
So I think as far as gas prices are concerned, we need to look at it in right perspective. If you really remember, current pricing formula was fixed sometime in 2014-15, and the prices which were discovered because of the through the same formula, were close to around $5.05 actually. So and actually what has happened is that as the things moved, the formula itself started resulting in generating a figure which was significantly lower. In fact, the last price, which was 179, was less than half of even the cost of production of the upstream companies in India. Today, even the ruling price, which is less than $3, actually results in substantial losses to the upstream companies as far as gas business is concerned. I think they are in a better position only because part of it gets compensated because of little better revenue in oil. Now, $6, if you really think that in 2015, the gas price was already $5.05, so something like $6, $6.50, is not a very significant increase over a period of 7 years. However, if one looks at it in the context of what prices prevailed in the last quarter, then it is close to around 4 times. So it's a question of what context you adopt, number one. Number two, I think, see, in the entire energy chain, gas is the only product now whose prices are controlled. If you look at, oil, and 85% of which is imported, you have no control on prices of imported control. Upstream producers are getting parity prices as far as their domestic oil production is concerned. Gas, again, 50 to 55% is imported. You have absolutely no control. So I think the whole rationale of controlling the prices has gone over a period of time. It, in fact, could end up being shooting ourselves in the foot. Because if you deny the right prices to the domestic gas, then in fact you could end up, subsidizing or creating the industrial opportunities elsewhere, and you are importing. So, and all taxes, etc., and jobs, etc., are created in those countries.
No, makes sense. So, sir, can I now turn a bit micro and try and understand what would this mean for upstream companies? Because the most common narrative is that, almost all notes, and rightly so, say that at the current prices, the stock note says that at the current stock prices, ONGC or Oil India or somebody else is discounting crude at only $65 per barrel. If you take the spot prices, then it should be much higher. And at the same time, when I look at the quarterly earnings quarter after quarter, there is not a linear, straight 1:1 correlation between the uptick in crude and gas prices and the revenues and the profitability of some of these companies, because there are other costs involved, there are production issues involved. As somebody who's manned ONGC on both the counts, what's your sense of what kind of delta does come in for India upstream companies as a result of the sharp uptick in oil and gas prices?
So one is, luckily, government has not tinkered with what upstream companies get for each barrel of oil for the last couple of years, and I believe the same will continue, because there is absolutely no justification for interfering or inventing new formulas in this area, because we need to address the bigger issue of 85% import dependence. Obviously, at the end of the day, whenever the prices are high, this goes to push up the top line and obviously the bottom line as well, as far as oil and gas companies are concerned. And if you have looked at 9 months financials for both the substantial upstream companies dealing with oil production and also Vedanta, the bottom lines look pretty healthy at this level. And since prices in fourth quarter are still higher, I believe that fourth quarter performance will be significantly better. I'm not really, in terms of specific numbers, I would be very wary of giving any number. Having said that, that actually builds capacity for these companies to invest in exploration and, go for the bigger projects. This also creates a scenario where some of the projects which were not economically viable or which were not perceived to be viable earlier could be perceived to be viable now. I think as an industry, what is also affecting, you also talked of the way the market looks at the equities of these firms. So one is, of course, perception of being very closely linked to the government, which actually creates an apprehension in the mind of investors that each better realization could result in more siphoning of the funds. But I think something more fundamental has happened during the last 2 years, which is true of global companies. Because if we really look at multiples for oil and gas companies, they are low for companies globally. And the reason for that is because of the narrative around energy transition.
Yeah, sure.
So actually, see, unfortunately, it is one thing that we need to register the requirement and urgency of energy, climate change, and the need for a smooth and orderly transition. However, what is happening is that entire, narrative is changing against the fossil fuels and especially oil and gas. And consequently, today, if anyone were to create a surplus capacity or go for a new projects, these projects are for 15-20 years, and there is no visibility that actually there will be offtake. So that's another thing. Third thing actually, which is affecting the industry globally today because of this narrative, is as well the spare capacity. There is talk of spare capacity at OPEC level. There is talk of spare capacity here and there. In fact, spare capacity, creation of spare capacity involves a cost. If you tell that the shelf life of industry or the investment you are making is only 10 years and it takes 20 years to break even, then who is going to bear the cost of this spare capacity? So consequently, what has happened is that at the end of the day, the investments for meeting the current requirement as well as for creating the capacity are being withdrawn.
No, makes sense. But so yeah, that's actually the big picture narrative. I'm just trying to understand, sir. again, the belief is that a $1 per barrel increase leads to about a 2 to 4% increase in the earnings for India upstream. Now, would you believe that in a very sharp uptick, that mathematics stays the same? And two, because of the various kind of other production costs involved, or old oil fields, so on and so forth, would you reckon that there will be a straight as linear correlation to earnings and profitability as an uptick in oil prices, or could there be some changes to that?
Okay, so let me talk in terms of a couple of key elements. One is statutory duties. So as far as oil is concerned, around 31% of whatever is the top line goes as statutory duties, whether it is cess or as royalty. So out of $1, what we effectively end up getting is only 69 or 70 cents. And further, if you really look at higher prices, of course, corporate tax goes another 24, 25 cents, so which actually leaves the upstream companies by 45 cents. And if you really look, being a PSU, actually, if you declare dividend, another 23 cents or so goes. So out of, as PSUs, out of $1, around 77 cents goes. Having said that, in terms of elements, statutory duties go up. Actually, there is also, the services, the cost of services goes up. It does have a certain lag, but however, whatever new service contracts are going to be entered into by oil and gas companies at this point in time, that will cost. In fact, the costs are increasing for another consideration also, for the reason that oil and gas is not perceived globally as a sunrise industry. Not many people in younger generation are joining this. While I don't really share this perception, however, this apprehension is there in the mind of younger generation, and consequently, the costs are going up. The replacement costs per manpower are going up. So the lack of expertise or unwillingness services are going up. Of course, manpower related costs do go up a bit, but there is a lag. But they don't go up to the extent to which actually the oil prices have gone up. Frankly speaking, for oil and gas companies world over, anything like $60 to $65 per barrel is a fair price, but then that has to be available on a sustained basis. In fact, if you really look at the period from 2020 to 2022 till now, despite the record prices, which are touching something like 2008 record, we would not be close to an average price of that.
Okay. Mr. Kumar, we'll wrap up this interview with one final question. A fairly renowned market watcher wrote recently that if in the last decade data was the new oil, then for the current decade, oil is the new data. And the world is so underinvested in energy that some of the energy companies will have a really great time in this current decade. My question to you, sir, is that do you believe that because of the underinvestments and because of the fact that commodities and energy in particular could stay elevated at a new normal, which is slightly higher than what the normal was, that the fortunes of some of the upstream companies would be better over the course of the next 3, 4, 5 years, even the Indian ones?
So I share it. In fact, the whole narrative, which I alluded to, needs to change in the sense that if we are talking of anything to be done in 2040 or 2050, we need to reach 2000. We need to, cross so many years to reach 2040 and 50, and that will be a period where you require a lot of oil and gas. And even if no further capacity were to be added, this industry being having a normal decline rate of around 8 to 10%, actually you need to create additional production capacity of close to 8 to 10 million barrels a day on an annual basis, which requires huge investment. You have rightly said that, part of it, advancement in technology, the new knowledge, actually does help address some of these costs. So maybe if traditionally cost was X, probably for creation of new capacity, you would require a somewhat lower number. But at the end of the day, you require sustained investment. If you deprive this industry of the investment on a sustained basis because of this mistaken notion of being able to transition in a day, then actually we will be in crisis after crisis. The triggers could be any. So for quite some time, actually, this industry needs to be supported. This industry itself also needs to rise up to the challenge and learn and use data and use investment wisely to be part of solution rather than being seen as a part of threat
problem
to the climate change. Yeah.
Yeah, great. Mr. Kumar, thank you so much. Appreciate your time and do stay safe.
Thanks, Neeraj. Please have a nice day.
Thank you. Viewers, thanks for tuning in.
Okay.